and is now looking forward to an even more eventful 2026, a year when the company hopes to achieve profitability and perhaps even explore a public offering. I spoke to its co-founder Harshil Mathur earlier. Take a look at that conversation. Harshil, thank you so much as always for taking time out for CNBC TV 18. Since the last time that we were here at the GFF, what is the one biggest change you've seen this time around? And don't say Bollywood stars or the Prime Minister.
No, I think the conversation is about AI. Yeah. Everything is about AI right now, and I think that's the biggest change. And not just in terms of using AI to deliver products, but how AI is driving changes in organizations, in culture, in people, in how you operate and how you work. I mean, for example, the quality of videos of all launches is extremely high because everyone is using AI to make videos. Okay. So that's the biggest change. Okay,
because we're coming to the end of the year and 2026 is starting, just give us in a few words, what are some of the most exciting things to look forward to from Razorpay that we'll hear?
Yeah, so multiple things that we're working on right now. I think one big area that we're going to see a lot of expansion is cross-border payments. I think the cross-border payments is getting simplified and eased a lot more, and partly due to regulation, partly due to technological changes that are coming in. And I think I look forward to how we can drive more and more payment volumes across different parts of the world coming to India and going out from India in a massive way. That's one. Second big area would be, again, AI. How we can leverage AI to make payments easier, but also make it easier for AI to make payments. I think that's going to be one of the biggest changes that we're going to start seeing next year. People are trusting AI to do more and more. And I hope or believe that by next year we'll reach a point where people will start using AI to shop and do commerce as well.
All right. I mean, we've been seeing you have a very busy past few months. I mean, right from, Indian businesses accept Apple Pay thanks to Razorpay, biometric card authentication with Yes Bank you were talking about, card tokenization solutions with Cred and Visa and whatnot. What next? Are you announcing something here at the GFF as well?
We have one of the biggest launches of GFF coming up tomorrow, so I don't want to...
Give us a sneak peek.
I think it's around AI. It's around how we can start leveraging AI to make payments inside apps and on agentic interfaces. So I think that's one of the biggest changes. And I think, without going into details, India will be the first country after US to make those kind of payments possible. So it's not just a proud moment for us, but for the country itself. I think just making the technology available faster than anywhere else in the world, I think it's going to be massive. So when people say India is not doing enough around AI, they should watch out for tomorrow.
So Harshil, this AI launch that you're not telling us much about, how significant will it be for business in terms of volume growth, in terms of revenue addition? What will that mean for Razorpay?
See, I think this is a technological shift, right? Like the way UPI was, right? It will take time for people to actually adopt it. So I'm not really... we're not really building it in the sense that, hey, next 1 year will it create a X amount of revenue or X amount of business?
No?
No, not really. Because these are there's an adoption curve to it. But if I look at it in the next 5 years, is this going to be a primary way people will start consuming commerce? I believe so. Right? So think of it, when UPI was launched, it didn't pick up in 1 year or 2 years. But in 4 years, it became the dominant way of making payments. Mobile payments became the dominant way of making payments. I'll say the same about AI payments. It's going to get launched probably today, tomorrow, sometime. But it's going to take its time. It's going to take a year, 2 years to adopt. People would learn how to buy using AI, how to consume commerce using AI. But I think if I look at 3 years, 4 years out, I believe it's going to be the dominant way people will start doing commerce. You'll not go into websites and browse for T-shirts. You'll tell an AI, find me the best T-shirt, I want in this look and this style, and find it for you, and then he'll say, buy it for me.
Well, I don't know if I'm going to do that, but, another recent change that we've seen in terms of regulations is RBI issuing the final guidelines on payment aggregators. Operationally, for your business, how does life change? Are you compliant, or are there some changes you'll have to make?
I think to most extent, we were expecting these coming in because the draft was released sometime back, almost a yearish back. So I think we were gearing up, and I think I'm glad that RBI gave us a lot of time to consume the draft. We gave a lot of feedback. A lot of those feedback has been incorporated. I think it has come out in a very good shape. Okay. I think the best part about these guidelines is it creates a level playing field in terms of drawing clear boundaries. If you look at it, it is essentially shut down all the previous circulars, and there's now one single circular that payment gateways need to follow. There were a lot of series of circulars that have happened since 2020, since this space got regulated. But now there's one single circular, and I think it has added some things, it has removed some things, but overall it has made the whole process more uniform. So, and the other good part is they have given enough time to comply with the new guidelines. So I think from that perspective, I think we'll be able to adapt to this change, and I think I personally believe that we'll be in a better state once these changes are fully implemented, because now there'll be a clear definition of for every player on what you can do and what you can't do.
So no grey areas, and that will give some confidence to the sector. But, speaking of some of the grey areas for the sector and real money gaming, recently we saw the real money games getting banned, and there was a ripple effect for the fintech sector. For Razorpay itself, how large was, the total transaction volume that got impacted? And overall on the revenues, has there been, have you felt any impact?
Not significantly. See, because of the way real money gaming is, we are limited in the kind of customers that we actually used to serve. We only serve 2 or 3 large players. So overall, the impact, like overall payment volume that we used to process for real money gaming was less than 500 crores a month, right? Like at our scale, that's meaningless because there's a lot more other volumes that we do. So from a revenue perspective, it was not a significant impact, maybe less than 1%. But of course, that is one side. That is the business side of it. Yeah. But I personally knew a lot of founders who were building in this space, and whatever said and done, whether it was right or wrong, I do feel personally for a lot of founders whose business is completely shifted because of what has happened. I still hope that some of them are really strong founders and they'll find a way to build strong businesses around it.
Well, we certainly hope so, and we've seen some of them pivot into parallel businesses. But a quick word on your numbers. 10 years into the business, 2,500 crores almost of revenue, profitable on the core payments front, but overall profitability, how much closer are you to it?
So overall, we are breaking even, almost breaking even now. And I think last time I spoke to you, we gave ourselves a timeline of 2-ish years to achieve profitability. I think we are ahead of that. So we are almost breaking even on the overall space of things. I think by next year we'll start generating profit, and that's around the timeline that we are thinking that we'll think of filing and listing.
Okay, so the IPO by 2026 end, is that on track?
Financial year, yes.
Financial year 2026. That'll be sooner. That'll be March of next year.
Next financial year.
FY27. Yes. All right. On that note, Harshil, we wish you the best, and we're going to track this journey very closely. Thank you as always for your time here today.
Thank you. Look forward to it.
Well, that was Harshil Mathur of Razorpay. But next on the hot seat, I caught up with Upasana Taku, the co-founder of Mobikwik, which has now spent 9 months as a listed entity. I caught up with her earlier, where she said not much has changed for Mobikwik, but a whole lot more is expected in the coming year or so. We also spoke about the company, going back into losses this year after finally becoming profitable in the last financial year. But Upasana told us that the company will soon be able to get back in the black, and she also spoke about their interesting stock broking license and the plans with that. Upasana, thank you so much for your time here with CNBC TV 18. 9 months as a listed company. What have been the initial thoughts? What's changed?
I think that it's just growing up, right? You're a teenager, then you go to college, then you graduate, and you have to think about how to have a steady job and while keep growing. I think similarly for a company, getting listed is an ambitious moment, but it's sort of setting yourself for the next level of growth. Yeah. So there's more prudence in terms of quarterly reporting, in terms of transparency, governance, growth. Yeah. But I don't think that life has drastically changed. I think it's more of the same thing, but doing it, I guess, on a regular reporting and more systematic fashion.
Even in terms of numbers, it's been a record in terms of GMV growth for Mobikwik. I think you've crossed 1 lakh crores as of the first quarter. Are you on track to repeat this kind of a performance in the second quarter? Your merchant base also, I think, from what I was seeing, 4.6 million and 176 million users now. At what pace is business continuing to grow?
Oh, business is growing quite nicely. I think last year we recorded about 3x growth in our payments business. Of course, we also saw some downward trend in the credit distribution business. Yeah. But there also Q4 and Q1 we have grown about 30-32% in terms of credit disbursals. So from a business growth perspective on all ends, whether it is the consumer payment business, whether it's the merchant payment business or the credit distribution business, things look very good. We've also launched interesting new credit card on RuPay credit card on UPI products there, and the card is called First Card because very few Indians have a credit card in India, and we want to bring that product also to everyone, so to speak. And starting from 5,000 rupees, anybody can get a credit card on the Mobikwik app. That's why it's called First Card. It's your first credit card.
What kind of AUM are we talking?
Look, I can't give any forward-looking projections, but I would like to say that a lot has changed there from a regulatory perspective, the 5% DLG contracts, small ticket lending, we used to have a BNPL product that got completely shut down, and therefore we started launching these credit card on UPI product. So there's a lot happening there, and I think the business is kind of stabilizing in Q2, and Q3, Q4 I expect to see a good jump in growth there also. When you asked what are the levers of growth, so we have these two table stakes, large businesses. We also have new businesses. We recently got a PAPG, payment aggregator, license. We also got recently the broking license. So the payment gateway business, the wealth business, they are also small and nascent, but they will also grow fast. So the idea, we are trying to really build Mobikwik as a full house of financial products with a core focus on delivering to the tier 2, tier 3 markets, what we call Bharat. And that's sort of the focus from the company.
But in terms of these newer businesses, specifically stockbroking, for instance, since you've just got the license, how long before it really picks up? What are the plans on that front?
So we've not even launched it yet. We are still building. So we do have some wealth products on our app. In fact, I should mention our most interesting product there is called Lens.ai, where using account aggregator, you as a user could connect your bank statements, your mutual funds and stock holding, and we'll analyze your portfolio, and in a very conversational format using AI, of course, we will advise you on how you can rebalance your portfolio. This is the first step for a person to make educated decisions, because not everyone has the time, whether it is you, me, or a small business owner. We can't be looking at screens all day in terms of analyzing our money movement. So this is our personal finance tool. It's free of cost, and it has a layer of conversation on top of it. So you could ask questions and it will reply to you. It's almost like a WhatsApp.
So this will be part of your stockbroking offering later?
Yeah, so it's a part of our wealth offering overall, because what I meant to say is that while we've not launched broking, we have Lens.ai, we have mutual funds, we have digital gold, and gold has of course been doing really nice this month. And we also have, fixed deposit. FD, as you know, is one of the most secure forms of yield-bearing products in India. But here we have high-yield FDs from banks and NBFCs that are giving, higher yields. So we have a wealth portfolio, but I think bringing the stockbroking will be cherry on the pie, so to speak. But we don't want to do it in a vanilla fashion. We don't want to do it just like every other stockbroker has done it. We want to have a unique, differentiated proposition, which is why it's going to take us some time to build it.
All right, let me quickly get a word in on profitability, because it took that long to become profitable last year, but now you're back in the red. What really has happened there, and how soon do you think you'll be able to get back in the black?
No, you're completely right. We worked very hard to be profitable, and we had about 6 quarters of profitability before we got listed. And it's just a matter of bad luck or destiny that just as we were getting listed, there were a lot of headwinds in the unsecured lending space, not just for Mobikwik, but overall for the sector. Last Diwali, things were, not growing, and since we are not the balance sheet owner, it's our lending partner, which could be a bank or NBFC. So they get to decide whether they want to scale up or scale down. And given that they scaled down, so our disbursals went down, and so our revenues from credit distribution went down. But of course, we already had previous loans we had given, so we had collections happening on that. We already had fixed costs built to a certain level, and which is why I would like to say that we have momentarily gone into red because of these things.
So how soon will you take to get back?
Yeah, so second half of this year is when I'm hoping we'll be profitable, and in fact Q4 to Q1, March to June also we have shown improvement. So we went from about 45 crores to about 31 crores in terms of negative EBITDA, a 15 crore swing. If we just keep doing that, then over a course of 1 or 2 quarters, we should
be back to being profitable. Could you also quickly explain what went wrong in that 40 crore system glitch that recently has been in the news? Was it a human error, system error? And, have been able to identify the cause and contain it so that it doesn't repeat again?
No, absolutely. See, we were able to identify the cause and fix it within 45 minutes of discovering it. What it was is, it was a bug. It was a technology bug which got missed in the QA also. So it is definitely our mistake. It did not impact any genuine customer or merchant, their balances, and for them the regular app continued. What happened is that because the bug was there, some merchants identified it, and overnight, in a span of few hours, they exploited it, and that exploitation happened majorly from one district called Nu in Haryana. And I think where people just woke up overnight, their friends, relatives, etc. There was massive collusion. Otherwise, that is not the kind of activity you see late night in terms of transactions happening on small merchants, like which Kirana store is open at 2 in the night, right? It isn't. So people found a bug and they exploited it. And by the time the teams looked at the alerts, it was early morning. We immediately fixed it within 45 minutes. But the beauty of it is the money has flown. Payouts have happened for transactions that were really not successful to our own merchants. So it's not a third party who is. There's no cyber fraud here. It's just some of our merchants have done collusion and tried to get a lot of additional money out of Mobikwik. But we can see the bank accounts the money went to. In fact, I want to tell you, in the last 2-3 weeks, many of these merchants have come back to us and given the money back to us. So we have now recovered more than 20 crores, and we think that we'll be soon in a position where we have even better numbers to report.
On that note, Upasana, thank you so much for your time. It's been a pleasure chatting with you again.
Same here, Ritu. Thank you so much.
All right, on that note, we have to take a short break, but don't go anywhere. We have a lot more lined up in just a moment after this short break. Welcome back. You're tuned into our Startup Street special from here at the Global Fintech Festival in Mumbai. Our last guest on the hot seat today is Alok Mittal, the co-founder of Indifi, a MSME-focused fintech major. We caught up to talk about what the potential impact of the tariff hit on India could be on the MSME portfolio and the business momentum for the company going ahead. Take a look at that conversation. Since you've just released your numbers, let me start with that. I mean, you've increased your revenue to about 360 crores, but losses at the same time have also widened to 45 crores. We just wanted to understand what has happened and how soon you can, come back in the black after this.
Absolutely. First, thanks for having me here. Certainly last year we have increased our revenue by about 22%. The losses are largely on account of the negative credit cycle that the whole industry has seen. Starting about towards the end of FY24, we started to observe an increase in delinquencies. That is where we have been focusing. At the same time, we also went through a transition to the expected credit loss framework. And so there is a much higher level of provisioning now on the balance sheet than what we have historically maintained. To the second part of your question, this is a temporary phase for us that we have gone through. We were profitable before this. And I'm glad to share with you that last quarter we have come back to profitability. So this is not an extended period of time for which we plan to make losses. This was
more of a one-time thing. Since you're more heavily focused on MSME, if I should put it like that, and that is a sector that is quite exposed to the threat of tariffs. What has been the initial conversation? How much of your book do you think could be impacted if these 50% tariffs were to come in?
In this context, thankfully, we don't have a large exposure to exporters. Right? Exporters will be less than 5% of our exposure.
5%.
And to that extent, we don't anticipate direct impact of tariffs on our customers. However, we are looking for second-order effects. So, for example, if exporters in the apparel sectors find it hard to export what they've built, and if they've got idle capacity lying around, will they produce and essentially make those goods available in the domestic market for a lower cost? And does that start to then affect our domestic customers? Right? So those are things that we are beginning to look through and understand which parts of the value chain may get affected, which will be relatively resilient to it, and accordingly tailor the kind of risk we are underwriting.
Got that. In terms of diversification as well now, your D2C lending has become almost 20% of your portfolio. Supply chain, I believe, is 6 to 8%. Which of these newer verticals, relatively newer verticals for you, are showing more traction, and how do you expect this mix to evolve? Will you continue to diversify away from MSMEs?
No, so our core focus will remain MSMEs. So even when we are doing D2C lending or we are doing supply chain financing, the borrower that we have is an MSME. In fact, the reason why we've introduced new products is because we see cross-sell potential to our existing customer base. So we started supply chain finance, we looked through our database, and we found that we had literally thousands of customers who are part of corporate supply chains, and we were lending to them as unsecured business loans, whereas we could have lent them in a more secure fashion through supply chain financing. So that is the core thinking behind why we are going into product diversification. D2C is now a 2-year-old initiative for us, and so it started getting to 20%. Supply chain finance is a 1-year-old initiative. It's at about 6 to 8%. We've also started loan against property mortgage business, which is a 6-month-old initiative. So I think as we roll this out over time, my expectation is that the supply chain finance and the lab business put together should start to get to about 20-25% of the business in a 3-year time frame.
And an AUM target that you could give us for the end of the year, including what you're doing through your NBFC?
So the current AUM numbers of about 2,000 crores are what we manage across our NBFC and the marketplace platform. And that is how we build the entire business. Honestly, we've just come out of a credit cycle, which is more consolidation move, not focus on growth, but focus on controlling credit costs. Now that we have passed that threshold, we are beginning to put the pedal back on growth. So in the next 6 months, the effort will be to revive growth and make sure that we can get on the growth trajectory for the next 2-3 years.
Will that require some capital raising?
No, at this point, we don't need that.
So there are no IPO plans on the horizon either?
Not in the near term. But from a private fundraise standpoint, currently we are adequately capitalized for at least next 12 months of growth. And then as we start delivering some of the growth, we will simultaneously think about how to capitalize ourselves for the next phase of growth.
All right, that's all we we had on this special edition of Startup Street, coming to you from the Global Fintech Festival. Thank you so much for tuning in. It's a goodbye and thank you from us. But don't go anywhere. More news and updates will continue after this short break.